Good morning and welcome to the Milk Road AI Show. This is going to be a twice-a-week podcast where we discuss the largest investment theme of our lifetimes, which is AI, and also something I'm extremely excited about, which is the intersection of AI and robotics. My name is Duncan. I'm from Flood Capital on X, and this is how the show is going to work. So basically, on Wednesdays, we're going to be doing interviews with some of the largest fund managers, capital allocators, and investors in the AI space, talking to them about how they see the future unfolding and the bets that they're making. This will primarily be led by Kyle Reedhead, but today I'm taking the mic. Then on Fridays, my co-host Patrick and I are going to be breaking down the biggest investment news of AI that week. And we're going to tell you what matters, what doesn't matter, and how we're personally investing in AI. For today's episode, it's with none other than the CEO and founder of Galaxy Digital, Mike Novogratz. I sat down with Mike in the Galaxy offices a couple weeks ago to discuss their booming crypto and AI data center business. So without further ado, let's jump in.
We're here in Galaxy's office. We don't do a lot of podcasts in the main office.
Yeah, no, it's a pretty cool setup. I was here yesterday. Got to meet some of the folks.
Awesome.
Yeah. So do you want to talk? Everyone, I feel like whenever I listen to a podcast of you, they always ask you on like macro stuff first. I feel like you just kind of need to. But like I think that you have some of the best takes in like the short term price action world, especially for crypto, because you're so plugged in with, you know, talking to all the institutions in here, all the U.S. capital, politics, maybe some of your billionaire friends. But I guess like where do you think we're going in the short term? And then we can talk about some more interesting stuff. I just feel like it's a mandatory question.
Yeah, listen, let's start with broad risk. It is setting up that we're going to have one last monster rally into year end in equities. Everyone wants to short them, including me. I keep shorting them and then buying them back. And I look, we're 0.5% away from a breakout in the S&P. We started breaking out in the Dow already, where you could see, and this often happens late in the year that's been a good year, right? S&P, all the indexes are up 15, 20%. We call it the run for the roses. Okay. Like at the Kentucky Derby, when you turn into that last quarter, you jam the whip to the horse or the gas pedal down, and it really just pushes the markets into the D31 print. So hedge funds can print the high mark at D31 and take their 20%. But there's a psychology around that fourth quarter where the winners win more, and it feels like that this year. And I couple that with the fact that we're in one phase of an AI bubble. Is it the middle phase, the end phase? I don't know. And I've lived through a few bubbles. The most prominent bubble of my lifetime was the internet bubble, right? And what I learned back then is bubbles almost always happen around technologies, around stories that fundamentally shift the way everything happens in our lives. Right? Railroads were an unbelievable technology, right? Changed the way commerce happened. The internet changed everything about our lives. How we date, right? How we consume news. Like, think of something in your life that the internet didn't change. Now, also think of the fact that in 1999, the NASDAQ, or 2000, March of 2000, the NASDAQ peaked, right? It was the 99 internet bubble, and then it had that last 40%, just 40% for the first 2 months of 99.
Yeah.
And then it crashed. It didn't get back to that price for 16 years. 16 years from 99 to 2015 before you took out the old high. We went down 82%, and then we ground our way back up over 15 years. 6 years later, after the crash, we got Facebook. 7 years later, we got the iPhone, or maybe that's backwards. But really, the internet, the way you guys, your generation, think of it, didn't start till 2006. I couldn't download a movie. It was the thing called buffering. I mean, and so you couldn't watch a movie. Like in 99, it was the story.
Yeah.
Stories are powerful. We've learned that in crypto. This AI story is going to be the internet squared. And so I don't know where the bubble ends, but it feels like we're in a bubble, and that's driving a lot of risk price.
Yeah.
And so it makes investing really hard.
Yeah, so you're kind of keep on dancing and into the end of the year?
Yes, but the real trick of riding the last, because you don't know if it's 3 months or 18 months, is you have to have a dashboard of things that you're monitoring that give you some signals that, oh shit, something's changed, right? The last of the good news. They usually end around symbolic gestures, right? The internet bubble ended with AOL buying Time Warner, right? This startup little internet company that doesn't even exist anymore, right? Think about that. It wasn't Google buying Time Warner. It was AOL.
Yeah.
You know, Steve Case was the CEO. It was a decent company, but it was a lot of hype. Took their currency and bought one of the great legacy media companies in America. That was the symbolic top. The Asia bubble, 97 I also lived through, ended with the Hong Kong handover. That night was the single largest fireworks display the world had ever seen. That's how markets end, with fireworks and champagne. And so have we had that moment yet? Doesn't feel like it. And so, again, this is art, not science. What else you look at? You look at how's the economy doing? Are there cracks in the economy? What are credit spreads looking like? The politics, I've never in my entire, what call it, 40 years of looking at politics and markets, seen so much discord, like so much false information on both sides. We've got an administration that campaigned on the fact that they thought our institutions were corrupt. And part of America believed them. And now they are literally gutting these institutions that our entire framework was built around over the last 80 years. From our defense, posture to our economics to independence of the Fed. And so all of that adds volatility.
Yeah.
And so it makes it a really fun but challenging time to invest.
Yeah, that's interesting. I guess looking for some advice for myself. So in May of 21, I went to university in Canada. I went to McGill for 2 years. I left, joined Delphi Digital as an analyst there. Yeah.
Shout out to Delphi.
Great guys. Go subscribe to their research. They put out some really good stuff. And so it was, covering crypto. They all have it's all internal capital. So kind of one of the perks of being there is as an employee, you can invest your own money because there's no LPs to deal with. And so I had a pretty awesome run.
I knew them when they were all living in one loft together.
Yeah.
And their capital was their girlfriend's, Rice Krispies. that they were nice. She was nice enough to let them eat so they could survive. Yeah. And now these guys are driving Lambos.
Yeah, I know. I won't mention who, but one of the partners there, I was talking to him, and he said he was just in 2018, just rolling zero interest credit cards to buy more at the bottom. So that was, anyways, worked out for them. Great guys, but. So I had a pretty good run. I made my first money on Luna. I know that's interesting subject.
I kept that tattoo close to you.
Yeah. And so I ran up, and then in May of 2021, I was fully invested, and then Bitcoin dropped, right after the Coinbase IPO from $60K down to 30 in a matter of a couple weeks. My portfolio and net worth went down 75, 80%. I was whoa. That was my first real awakening to kind of how volatile these markets could be. And then after that point, I kind of made an internal rule for myself. Whenever I'm at portfolio all-time highs, I'm going to try and rebalance to around 20, 25% cash. And then if I have another 70% drawdown, I still have that's at that point in those prices that's a lot of cash.
Here's some advice, and I'm going to give you the extreme example.
Yeah.
The two best trader investors, well, 2 of the 5 best trader investors I know in my life are Stan Druckenmiller and Paul Tudor Jones.
Yeah.
Stan's worst year is a positive in his fund. Actually, there was one year when he was managing money for Duquesne, he lost. For Soros, he lost money. Paul Jones, in his own trading, not his fund, his worst year is down 32 basis points. And these guys are very, very wealthy. They've been very wealthy for a long time. They've got a lot of respect in the market. One great rule is as you get a high watermark in your wealth, to the best you can, think, that's my money. It's owed to me. I can't lose that money. And you've got to protect your drawdowns.
Yeah.
measure your Sharpe ratio. One terrible drawdown destroys your Sharpe ratio. And this game in the long run is about building a Sharpe ratio so you can convince yourself and you can convince others that there's a little bit more than just luck. That there's something systematic about how you see the world and approach the world. And so I know crypto has this ethos. It's like, I got to get punched in the nuts like 7 times just to make myself a man, and losing money is good. Losing money is not good.
Yeah.
Losing money is bad. It's not fun. Every time I lose money, I'm like, oh, it drives me crazy. I should have seen something. I should have bought a put. And so when you're in these parabolic moves, and we're not in crypto a parabolic move at this point, to be fair, but we are in equities, in data centers, and in lots of things, constantly be thinking about what's my exit strategy and how can I get some puts in there? How can I hedge?
Yeah.
And what's the correlated put? Like some of the greatest hedges of all time, Bill Ackman did one right before COVID, luckily, are credit spreads. Because in euphorias, credit spreads get so tight. Well, they could only go to 0.
Yeah.
And so like in 2007, you could have paid IG credit, so the top credits, for like 20 basis points over LIBOR. Well, it can only go to LIBOR.
Yeah.
And so maybe at 15 was the all-time low, so you're risking 5 basis points, and it blew out 150. So make 150, risk 5, and you can do highly leveraged trades there to hedge your portfolio. And so that's a credit trading example. Most crypto guys trade too leveraged, right?
Yeah.
And it's great to trade leverage, but once you've won, then protect.
Yeah. So is that how you like to protect yourself, like buying puts or like buying downside protection versus like actually selling and kind of having some cash?
It's both. It's both. We always have cash.
Yeah.
In general, my rule of thumb in options is 30 delta 3-month options are a terrible thing to buy. Because it's broadly just, usually the markets are efficient, and in 3 months you've gotten close to your strike and you've paid away a lot of premium either. And so I like to buy really short dated options when my spidey senses say, oh shit, something could change.
Okay.
Things are too extended.
Yeah.
Or if volatility is low, if Vega is low, I'll buy longer dated, very taily options.
Yeah.
Right? And I'll often buy them and say, man, like right now, if you just think of the Bitcoin chart, at what level would you think, no matter what happens, I want to buy this thing?
I don't know. I more think about the Galaxy chart versus the Bitcoin chart.
But so the Bitcoin chart, maybe it's 80. Okay, it shouldn't go through. And so if you could buy 80 puts for a year out at some tiny, you can't right now at cheap price, but if you could, those are great to have in your bottom drawer because when it gets there, it gives you all the courage to buy a ton.
For sure.
Right? Right now, vol is probably pretty cheap in crypto, but it's not screamingly cheap. And so how I've been hedging is short-dated stuff when I sense something.
Yeah, that makes sense. And I love calls and puts way more than leverage trading because I feel like I just can't sleep at night leverage trading. And
the moment you can't sleep, you have too much risk on.
Yeah.
And people ask, well, how do you get used to these huge P&L swings? Think of it this way. All of us in this room can walk across a balance beam if it's on the floor, right?
Yeah.
I mean, that guy over there, he's a little uncoordinated. He might fall down, but we're not scared of it because if we fall, it doesn't hurt that bad.
Yeah.
Now I'm going to put it at 4 feet. I bet half of them fall.
Yeah.
If we put it at 15 feet, oh shit. It's the same balance beam.
Yeah.
And so you slowly increase your sizing and your comfort of volatility of dollar P&L swings, not of percentage P&L swings. And so at one point you're walking across the balance beam 150 feet in the air and it just feels like it's on the ground.
Yeah.
Right? And so you can't go from 1 foot to 100 feet overnight. You'll shit yourself.
Yeah.
And so part of this is growing into risk tolerance.
And how do you think about taking like really big swings at something that you're like really convicted in, or like you're explaining with the credit spreads, like, you know, there's pretty minimal downside and then potentially like
So if you
a lot
can
of
find
upside.
the huge asymmetric bets,
Yeah.
you want to put some money in those things, because when they win, you win big. And one of the ways you get your courage up is you win on an asymmetric bet.
Yeah.
Like I bought Ethereum at 1.
Yeah.
You didn't have to buy that much. And if you could hold it to 20 even, you're 20 extra money, let alone
Yeah.
4,000 extra money.
Yeah.
And so once in a while you find asymmetric bets, either because spreads are tight or because you found something.
But like, how did you size that when you saw it? Like, you Bitcoin at 100, Ethereum at $1.
So in reality, it was probably a 25 basis point position on my net worth,
Yeah. Okay.
right? Almost nothing for a guy like you. I just happen to have a big net worth, so I bought $1.5 million or ish of Ethereum. Maybe I even got a little less than that. But right about that. I was trying to buy that much. It was hard to buy.
Yeah.
And, you know, that wasn't all at one, but in that first little surge. And, you know, I held on decently. I wish I still owned all those ETH.
Yeah.
You know, it's really hard to hold something the whole way.
Yeah.
But for me, you know, and this is a little unfair, I made a lot of money in crypto. One of the reasons I made a lot of my crypto, I started with a lot of money. And so it was easier to both hold, but also to take a decent position.
Yeah.
I think my first Bitcoin, you know, position at 100 was, God, I wish I had all those Bitcoins still. And I did a good job of holding pretty long. But, you know, it's also risk management. At one point, you take something off to buy other stuff. And so, yeah, it's asymmetric bets. So when you've won big on something, unless it has a monopoly, you got to take chips off the table. So Google, Microsoft, Amazon, Facebook, those 4 companies. I remember Peter Thiel. Peter Thiel was a macro investor at one point before he was Mr. Sinister, you know, the Antichrist. You know, he was a darn good macro investor, and then he kind of blew his fund up, and then he went back to venture and being a businessman and a philosopher. But Peter's smart as hell.
Yeah.
And he was at a conference, and he gave this pitch that those 4 companies were monopolies. And he explained why each one had a monopoly, and he said, you don't sell monopolies. And to be fair, I bought a bunch of those stocks, and like an idiot, I made 30% and sold them all because I had too short-termism. Monopolies, you hold on forever.
Yeah.
I don't know if Peter held on to those stocks, but if you had, that was probably 2012-ish. I bet if you go back and look at those stocks from 2012, if you just had a portfolio of those,
It'd be very difficult to outperform that.
you're the king of the world.
Yeah.
And you could probably find that presentation, I think, is online. Peter, like, he was clear as can be. And so, but most things aren't monopolies. And, you know, and so it makes sense to take profits off of things that have run way up, wait for pullbacks, because you got to manage your psychology and your capital. And your mental health is more important than your actual capital.
For sure.
It's the only real asset you have is your mental health. And so if you can't sleep, if you're nervous, if you're just stuck staring at the screen like staring at the screen, I know a lot of you guys think this is not true. Staring at the screen, no matter how hard you stare, will not move the price.
Have you seen the videos of the guys like blowing on the candle? Trying to get
We've all done it. We've all done it. Please, baby, please go higher. It doesn't work, right? And so going for a walk, you know, making your plan, having a stop loss, having a profit target. Like, profit targets are great because it's your brain saying, hey, if everything I think happens, the price should go here. So once it goes there, even if you take your money just for a little bit of time, say, has the world changed so much, or am I now just magical thinking?
Yeah, that makes sense.
And there's a lot of magical thinking because when you're making money, you have this dopamine loop, and you just think you're so smart and you're so handsome, and right? I mean, it's just like there's an amazing book that every young trader should read. It's kind of boring. and maybe you just have Chat GPT like read it for you, but it's called The Hour Between the Dog and the Wolf. And it was written by an ex-Goldman prop trader who went to Cambridge, who got a PhD in neuroscience. And he talked about the neurophysiology of trading.
Yeah.
And in bull markets, it builds testosterone. And you literally will have guys on trading floors talking about Lambos and girls.
Yeah.
That's it. And walking around. And in bear markets, fear comes in, and the cortisol cycle happens.
Okay.
And all of a sudden, all the bellies, you see guys, and why does everyone have a fat belly in bear markets? It's cortisol.
Yeah. That's interesting.
And it talks about it really scientifically, what happens when you're making tons of money. Yeah. And, you get carried away because...
And it's also like the group think, especially like in crypto. It's like, everyone's making a lot of money and then everyone thinks it's literally like when you're in these like big crypto chats or talking to people, like everyone's making money, everyone thinks it's going way higher, and then the exact opposite happens. So like I find it when things are getting crazy, it's like I like to that's when I go less on, social media and in these things. It's like I need to think for myself versus getting caught up in
that
this
is
whole group thing.
I keep shouting at Stan Druckenmiller just because his track record is just awe-inspiring. But he shows up at his office at the same time every day, and for that first hour and 20 minutes, he goes through his charts and he reads his news. He's got his process, which is quiet, where he gets to think. Yeah. Because most of our days, I got a buddy who's following me around for the last couple of days, and he's like, dude, you have no time to think. And I said, you got to cut some time. I think at actually night at like 3 to 5 in the morning, I wake up, I'm like, oh.
Yeah, that's what you think.
You got to cut yourself some time to actually process, have an opinion, to digest. Yeah. And
have your own opinion on what's going on.
And just staring at the screens and talking to 1,000 guys. Yeah. Twitter is actually a bad thing, or X, in terms of calmness and
definitely for calmness. Yeah.
Anyway.
Well, I guess chatting a bit about Galaxy. So how I found it is you guys were originally listed on the TSX for a while.
Yeah, you're Canadian.
I'm a Canadian. When I didn't have much money, I bought it like $1.50 CAD, something like that. So, then I got my mom to buy some.
It's a 40X if you're relatively 60K.
I held it. I held it all the way to 40, back down to 3, back up 50 or 60 CAD now.
See, you should have sold some the first time.
I know, but I was...
And the reason is just because you made so much money. Yeah. Like everything doesn't go in one line the entire time, and there have been cycles in crypto, and there were signals that things were euphoric, and you could look at our business. Yeah, we had a lot of assets.
Yeah, you're trading at like a pretty high price to book.
We had a lot of assets, but our business wasn't great at that time. Now we have, believe it or not, we have less assets on our balance sheet, less crypto assets as a percentage of our book by a long, but we have real business. Yeah, and so we did what we were supposed to do, but man, oh man, because I was the CEO, I wasn't allowed really to sell any stock. But I was like, man, I'm fake rich at 40.
now you're real rich.
Now I'm real rich. Yeah, feels much better.
Yeah. So basically, how I think about Galaxy is like the 3 biggest trends over the next decade that I think are like investable is like AI, crypto, and then robotics. I don't know if you've seen some of this, like what some of these humanoid robotics companies can do,
Shocking.
But. I think that's going to be really massive. And I think Galaxy sits like pretty squarely at the epicenter of like AI and crypto. And, on the AI side, instead of like investing in, OpenAI at 500 billion or like Anthropic or one of these companies and they're leapfrogging each other, you don't know who has the best model, all this stuff. You can kind of buy like the picks and shovels to the gold rush, and you guys are just sitting back and collecting rent. So I love it from that angle. And then in terms of crypto, over the past 8 years, you guys have built really awesome reputation. You seem to be the go-to people in, maybe in the world or at least for sure North America if anyone wants to do something in crypto. So I really, appreciate the stock from that point of view. And previously I was holding like all these altcoins, which have gotten a lot harder. Since 2021, you could throw a dart at the board and everything would go up. Since then, the market's matured and it's gotten a lot more difficult. But kind of during the tariff tantrum, I, moved a bunch of money into Galaxy because it was one of those things where it's like, okay, your book value might be $4 or $5 a share. And it's like your crypto business and Helios is worth
Well, the other way to think about our book is you can read what our book is. Yeah. What our balance sheet, our partner's equity, I think is 3.5 billion, or I'm going to get that wrong by something, so don't quote me, but in that zone.
Yeah.
Our data center, right, is going to start cash flowing soon. And so the way that equity analysts will look at it is some multiple on cash flow.
Yeah.
Which is great. The conservative investor will say, what's that $25 billion of rent worth after financing and discounted cash flow? And not the growth of the business, but the business that's already committed, you can think of as a bond.
Yeah.
It's a high yield bond with the credit rating of CoreWeave. And as CoreWeave's credit rating goes back, the bond's worth more and more.
Yeah.
And to me, that feels bookish.
Yeah.
Right? If I had a bond on my balance sheet, you'd call it book.
Yeah.
I have a synthetic bond in that I've got a data center that we own, leased out to a great tenant who has to pay me rent. And I've got a financing cost that he's partly financed, will finance the whole thing, and then the financing cost will come down.
Yeah.
And so so I see our book as much higher in my mind. That's why I sleep so much better. I'm like, even if the stock market goes through a drawdown, like it used to be our stock went all the way to 4, it can't go that low anymore.
For sure. So would you rather talk about like the crypto side or the data center side first, just in terms
Let's
of
start with data center.
Yeah, so on the data center side, I guess, Goldman did a report on you guys. I think they said by like 2028, around like 900 million in EBITDA. I think that's kind of using like the lower end of what you would get on the revenue side. It seems like it's a yield plus or cost plus or yield plus cost structure. Am I saying that right for the rental? So like 900 million. I think like Digital Realty and Equinix, like those guys trade at 20 to 25x. So I think Goldman was using a 27x multiple. So at 900 million times 25 times, it's like 22.5 billion, back out to 7 billion to build it. So that's like $15 billion potentially in 2028, just on that first 800 megawatts, which is like, I think a bit more than the market cap of the stock right now.
Yep.
So then you have another 2.7 gigawatts. And if you kind of like apply that CoreWeave lease to the whole,
well, then we're
to the whole 3.5 gigawatts.
Then I'm King Kong Bundy.
Yeah, that's like $60 billion if you kind of move that forward, which is
so. Let's talk our strategy and how I think things play out. Texas slowed approvals down about 5 months ago because they had so many people say, I want energy, I want energy, I want energy. And they wanted to go through and say who's real and who's not real. We are stone cold serious and we are very real. We are in process with the 3 different regulatory bodies down there to try to get the first piece of that 2.7 approved. That's the fastest way for us to add market cap and excitement to our stock, because we know what to do with that. You quickly go out to the 5 or 6 hyperscalers you have relationships with, starting with CoreWeave, Oracle, Google, Microsoft, you know them. You make a longer term partnership and get a lease. You take that lease, you finance it, and you add it to your construction schedule.
Yeah.
So that's mission 1.
Yeah.
Mission 2 is, where else do we want to do this? And can we take this muscle that started looking like your muscles and is ending looking like my muscles, right? You start small and you actually learn and you grow. And so you're hiring people with domain expertise. Your own guys are getting better by the week because they're in combat, right? When you're in the game every day, you just get better at it. And so Austin Storm, a much better employee today than he was 18 months ago.
Yeah.
And so you're developing a team that really can execute, and I think execution is going to be a big part of it. And so we are scouring the market for opportunities. We have people that want to partner with us, and I'm like, dude, as soon as I find the next piece that we want to act on, I said this on the call, and I don't want to confuse people on our earnings call. Right now, I wish I had acted faster 6 months ago, but we wanted to kind of do things in order. Everyone right in this moment thinks, oh, my piece of dirt's so precious.
Yeah.
They don't want to sell it, or they're putting dumb prices on it. This thing will cycle just like everything else.
Yeah.
And so we see this as a long-term business, not as a short-term trade. And so we are hunting for other opportunities. either acquiring companies or acquiring, but most probably acquiring properties.
Yeah.
Which you then can build data centers on.
So do you guys kind of see, this data center business as a longer term growth business for you guys, like positioning yourself as, so there's these existing data center companies like Digital Realty and Equinix, which trade between like, 50 and $80 billion. They only have like, 2-3 gigawatts of power themselves. So, there's a data point. And those data centers are much smaller. I think like the average site is like 5 to 10 megawatts.
Yep.
They're not built for AI versus, you guys have 3.5 gigawatts at one campus. You're custom building it for AI. So like, higher rack density, like this liquid cooling, the backup power, all this stuff. So could you see, that data center business becoming like, maybe you spin it out or you keep it under Galaxy and like, kind of the Digital Realty of like AI data centers?
We are, Chris, it's funny. You want to hire employees that wake up at 3 a.m. and their brain is like scheming all the time.
Yeah.
Right? I'm one of those guys. I'd hire myself. But Chris Ferraro is one of those guys as well. And so we call each other in the morning having schemed in our insomnia. We're constantly thinking of how we build this into a powerhouse business.
Yeah.
And you want to, like, thinking about how you do it is the first step. A lot of this is execution.
Yeah,
and
for sure.
So it was really important for us to get the first data halls paying us money and make sure we've learned along the way so we didn't fall into a giant pit of lava. But the plan is to build this into a best-in-class, world-class data center business. Does it stay at Galaxy? Right now, it feels like the market's giving us decent value for it. And we will see. We have I would call it a 1 year, got to paddle the canoe through choppy waters in terms of we don't really get a lot of the cash flow, and we need to borrow much more money. And so...
But then, like, once you can show you can build it for CoreWeave, like, I think, how I kind of think about it in kind of the more medium term is, like, once you start cash flowing, even at this phase 1 with CoreWeave, and then, hopefully you get this next 800 megawatts approved, maybe Q1 before the end of the year. That's kind of what management has said historically. Obviously, it's up in the air with everyone applying for power. Then you sign, someone like an Oracle or a Google as a tenant. I think the market is going to start to take you guys a lot more seriously.
You go from being a trade to a business.
Yeah.
And we're in that transition right now. And I think then the market gives us more value for that. And quite frankly, the company gears up around that.
Yeah.
Right? And so it would be sheer arrogance to say, we're going to be the best data center business in the world when we haven't built anything.
Yeah.
Like, your public persona, your public front, but also your internal confidence grows with success.
Yeah, for sure.
And so, like, this is, and people ask me all the time, well, Mike, your stock went from X to Y. How can it go from Y to Z?
Yeah.
And I was like, because you've got to bet on the fact that me and Chris and the team around us have been good allocators of capital, good allocators of our time, have been able to sniff out opportunities and jump on them. We're not perfect by any stretch. We've got a lot of dumb bets in our lives. But on the good bets, we've gone in hard. And, you should own our stock if you think we're going to continue to do that.
Yeah, and like I've been following you guys for a long time and felt that you've done like a very good job navigating crypto, which is crazy. And now, you're going into data centers. And I believe that you guys can execute on like at least like the 3.5 gigawatts you have. And you do the math on that. And that's like $60 billion. Like that's like a 4X on the stock without even the crypto business, without the balance sheet. Obviously, you're going to have to borrow a lot of money and a lot of stuff's going to have to come together. But, I'm young. I can wait for it to play out. And, you guys just added a full gigawatt of pipeline on not this earnings, but the earnings before. And, if you can keep on doing that, this could be a massive business. And we've seen like, that company Fermi that launched that they don't have anything live, but they have like aspirations to build something like 15 gigawatts. They're trading at 15 billion. So it's like, I think if you can actually execute on this first 800, get another 800 approved, sign with like Oracle or Google or someone, then the market can start to pull forward. Okay, these guys are legit. They can build out this pipeline. And that is that could be hundreds of dollars a share alone, just on that side of the business.
Your lips to God's ears. Listen, that's our plan. And, I hired a kid who grew up, middle class, tough, went to Yale. Like, it's not in Ferraro's DNA to say, look at me, look at me, look at me, look how great I am.
Yeah.
It's just not. He's a watch me build. And You can say that, but he's never going to say that.
I'll say it. I'll say it for you guys.
Right? And I'm a little cockier than Chris, but it's not in my DNA either. It's like we want to build something that we're proud of and that investors notice. I promise to try to do a better job telling our story because I get yelled at it all the time. I did a CNBC interview yesterday. You would have thought I committed murder. People were so angry. I was just answering the questions. It's not easy all the time
for sure.
And it's not in my DNA to be a shill.
Yeah,
it really isn't. It's DNA to try to be an honest broker and to tell the truth. And yes, I'm learning to. And it's a little unfair because all the reporters ask, they ask you a question, I answer it. It just seems like I'm not a politician where they ask you a question, you answer completely something different.
So I think on the data center business, that kind of covers, what you guys immediately have line of sight on and are executing on, and, your future pipeline, which could grow and, you might acquire other sites. So I think that in itself is a really attractive reason to buy the stock. But then you have this whole other crypto business. You guys just had a record quarter, $500 million in net income in Q3.
We got a question on earnings call. Can you annualize that? I said, God, I sure hope. Listen, we are working really hard to stack ARR.
Yeah.
What does that mean? That means build a bigger credit business, build a bigger staking business, build a bigger asset management business, and show up January 1st and saying, hey, if the world doesn't change a lot, we know how much revenue comes in because it's fee-based. Mm-hmm. That makes you sleep a lot better.
For sure.
We're never going to show up January 1st and have a perfect prediction because crypto is going to stay volatile. There's a lot of competition coming to our space. And a lot of our businesses aren't fee-based businesses. Mm-hmm. But our North Star is we'll call it assets on platform.
Yeah.
You can define that.
Yeah, well, that was up ways. A lot from $9 billion in Q2 to $15 billion in Q. That's pretty incredible growth.
And so that's the North Star because that gives you ballast.
Yeah.
It gives you stability. What I think we've built so far that I'm more proud of even than that is brand. Mm-hmm. Brand equals trust. That was what I set out to do. And, I started my career at Goldman Sachs. They've done it better than anybody.
Yeah.
People trust Goldman Sachs. And then every once in a while they dented their trust with the IMBD, the Malaysian scandal, and then they work hard to rebuild it. So you're not going to be perfect on trust. But if you build a brand that people trust you, that they call you for your domain expertise, they call you for your knowledge, they call you for your insight, good things happen.
For sure.
We got that $9 billion trade because there's a guy out there that I've known for a while who trusted Galaxy.
Yeah.
Not just me, but the guys on the team. Mm-hmm. And we executed, we made good money, they were happy with the thing. That helped our brand. We were able to set up the Solana DAT and raise $1.6 billion like that.
Yeah.
Jump Capital, who's maybe the most awesome infrastructure player, partnered with us because they trusted us.
Yeah.
We know they're senior people. And so that's what we're really still working at our first principle to build. And that's the hardest thing you can do in a business because you can give it away that quick.
Yeah.
And so you got to make sure you hire the right employees. You make sure you have the right culture.
Yeah.
That you weed out the bad eggs.
And how I've kind of thought about Galaxy is the crypto side of their business or your business is that you have, relatively stable costs and you've invested a lot into kind of growing the infrastructure, the intellectual capital, all the execution, setting everything up. And now we're kind of hitting this J curve of where you can really scale the businesses, right? How much marginal expenses do you have to add assets on the platform or expand the loan book or do more trading volume? And I feel like this quarter, we haven't seen the full financial breakdown yet, but $500 million in net income, part of that was from, I think Chris said the Bullish and Ripple Labs revaluation, but a big chunk of that was from kind of all these other businesses you just spoke of. So we're starting to kind of hit that
look at asset management
growth curve.
Asset management alone, just the money that we forget what we made, that we will make on an ongoing basis, the ARR from asset managing treasuries for these DAT companies is somewhere between 35 and 50 million annually. That's mostly, there's going to be some marginal expenses. We have to hire a few more people, but that's using our infrastructure.
Yeah, exactly.
And so that goes to the bottom line, not one-to-one, but it the lion's share does. And that's the first time I've really seen the leverage kick in, and you're hoping next year or the following year it really scales.
Yeah, that's kind of been my thesis. Like they've set all this up, they built this brand, and now like to do, marginal revenue shouldn't be that expensive for them. And like even if you can do, instead of 500 million a quarter, like half of that, and you annualize it, maybe that's aggressive, but like you could grow into that. It's like $1 billion a year. I think like Goldman was using like a 35x multiple. That seems kind of high. Up in Canada, ATB used like an 18x multiple. Even if you use like a 15x multiple, there again, you have $15 billion. Which is like the current stock price.
I constantly think about like, it's funny. The hardest thing for me, and I'm not great at it yet, I'm working really hard. I spent my life as an investor.
Yeah.
And being an investor is very different than being a CEO.
Yeah.
Right? CEOs think 15 years out, 10 years out. Investors think 3 months out. And they think on a circadian cycle.
Yeah.
Like a 1 year cycle.
Yeah.
Circadian, right? Like an annual cycle, right? How'd I do? Like I always thought when I was at Fortress, my tombstone should just have the dots, 06, 07, 08, 09, right? Oh, down. Like, because I put so much into my fund, like that was kind of who I was. And it's those dots were yearly, right? CEOs have to think much longer term. And so that's, I go to a shrink. I think about it a lot. Like that's the challenge of building.
Yeah. But I feel like Chris is good at that, right? Do you feel like he adds a good balance?
Full credit to Chris. He has been my partner from day one in this thing.
Yeah.
And I was kind of macro and he was credit. So I was optimist, he was pessimist. We've been a very good mix. And he has pushed me harder to think longer term consistently.
Yeah. And so on the crypto business, like obviously this is insane quarter, and even if you take half of it and annualize it, $1 billion a year, pretty damn good. And we're just kind of, as you're saying, like hitting this J curve of like all this institutional trust that you've like built up, and the reputation of Galaxy is like really coming forward. How do you kind of see Galaxy positioned, in the next 5 years on the crypto side within the US?
Listen, we are publicly have said we're working on this Galaxy One, which is a app, really a wallet that will be a one-stop shop for your financial life.
Yeah.
And we put an MVP out. It's a pretty cool MVP, but if in 18 months our MVP still looks like that, we're not going to win.
Yeah.
And so we've got a very ambitious timeline to build all the rest of the functionality to that thing. So that's part of it. Then you got to get a lot of customers.
Yeah.
And so spending a lot of time on customer acquisition thoughts. Part of that'll be organic. I'm guessing a lot of it will be inorganic. Like you're just not going to get in the game, I think, slowly.
Yeah.
And so if in 5 years that's not a big business, we have done something wrong. The other piece that I think we've got a fair chance to win in, or at least to be one of the winners, but no one has won so far, is infrastructure.
Yeah.
Is this idea of, as we move to tokenization of real world assets, as crypto and TradeFi blend together as one, who is going to be staking, custody, tokenization engine, how that all fits together, the link between on-chain and off-chain, Oracle. And so that piece, we're spending a lot of intellectual time on.
Yeah.
We're trying to hire pieces, acqui-hire pieces to really build into that.
And how far behind are like the big banks that, might eventually enter into the space from you guys?
I think you will see them partner and or acquire crypto companies. Some will try to build themselves. They're not as far behind as I would like, because the checkered flag's not down yet.
Yeah.
This hasn't even started.
Yeah.
Right? This is the growth of the business. And, we tokenized Galaxy stock. I'm proud of that. We were the first legit, tokenized stock. It trades on Superstate, which trades on Solana. I'm hoping in 18 months, there's billions of dollars, tens of billions of dollars of liquidity every hour of tokenized stocks.
Yeah.
Right?
That'd be awesome.
Right now, all tokenized.
Do you think that is like, there's a path to
there's 100%
happening?
a path to that.
That's pretty, this is the thing. I don't think people are like, if they use a bit of their imagination and just like understand that Galaxy's tentacles are basically in anything to do with crypto. And it's just like there's so many different ways for you guys to win, I feel like, within crypto. And like, if this whole vision of like, you know, all these assets come on chain actually happened and you guys are embedded within that, it could be like a monster business.
The real challenge is I know that's going to happen, and I know a lot of people are going to try to figure out how that they play in it. I got to make sure I got the right team and the right strategies that we get a piece of it.
Yeah.
No one's going to win the whole thing, right? Because it's going to really be Wall Street, you know? And so we're working on who should we partner with and what those partnerships look like and what should we do ourselves and what other companies should we buy to supplement what we have. But that's really, you know, I once said the crypto business, the data center business isn't complicated from a strategy perspective. And the crypto business is like 6 times more complicated. What I meant is, we know what you need to do in the data center business. Now you got to make a prediction on when that demand slows and how much you should pay. And so there are decisions to make, but you can write the 10 decisions on a paper. In the crypto, you're literally having to see the future. I was in DC all day long yesterday with, you know, with senators, both left and right, trying to help figure out what that legislation should look like to allow this to happen. And so there's a regulatory uncertainty, there's technological uncertainty. What blockchain is it going to be on? Is it going to be on all the blockchains? Is, you know, Solana or Ethereum? Or we had guys in from, another purpose-built blockchain for institutions. All of that is still a question mark.
But you feel pretty confident that in 18 months there's going to be, you know, tens of billions of hundreds of billions of stuff on like tokenized RWA assets on
somewhere
something.
Between 18 months and 36 months. Like
I think people aren't. That's not really clicking for people, right? And you talk a lot about, like, you know, the new head of the SEC is talking about he wants everything to be tokenized. Like, is that really, like, do you feel like when you go and talk to these like big US like financial institutions, it's really like clicking that this is the way things they're going?
They know there's a chance it's going to happen, so they're all spending option premium to make sure. Like, you know, if you look at Apollo, they hired Christine Moy, right? So she's been in crypto from the beginning. They're tokenizing stuff, right? They see this shift. BlackRock is tokenizing stuff. They want to build their own tokenization engine, right? So they all know this is happening. They don't know when. But no one wants to be short that option.
And how do you think Galaxy kind of like makes money from all this?
Well, listen, there are so many different ways you can think about it, right? Like, as institutions get in, we want to be their staking partner. Like, so we want to provide some services.
And those are pretty like bespoke custom services that they couldn't get. Like,
some will buy companies to do it themselves, some will build, and some will outsource. Right? Think about how many financial institutions there are.
A lot.
Every single financial institution is going to need a hot and cold wallet. Everyone, 100%. And right now, less than 5% have them. I'm making that number of 5, but I'm guessing. Right? There's from the regional banks to the European to the Asian banks to the big money center banks. So everyone has to kind of figure out how this new infrastructure is going to work. And we're so early in that, and we want to help guide. Like, my guess is staking fees get compressed because it's not that complicated to set this up. And so then you've got to pretty much have block builders and you know, MEV engines to monetize the fact that you're doing all this staking. And so how you get into that game, there's going to be an amazing arbitrage opportunity between NASDAQ and tokenized stock. And so, you know, we're working on that piece, but I'm guessing Susquehanna, Jump Capital, Tower, Jane Street, Citadel, they're working on that piece too, right? And so where do you have edge and where are other people going to have advantage? And so figuring out that landscape is really what's going to define what this business looks like in 36 months. In the meantime, you've got the traditional business you're working on, derivatives. Our derivative business is big and people trust us, and there's lots of money to be made in their hills. Switching that into structured products, selling, you know, principal protected notes to people. You have just the spot business, you know, executing people's spot, both electronically or for voice, right? Hey, people trust you to to buy or sell large sums of money. And so, like, you can't ignore those businesses while you're building into the future.
For sure.
We think credit should be ours to win. Like, we just are good at credit, partly because of Ferraro. Like, that DNA permeates our firm. We've been more conservative than most. And so we understand how to price credit. And so a lot of our skunk works is working on on-chain credit.
Yeah, that's awesome.
Then in time, how you can use this Galaxy One to really be a leverage provider.
And even this loan book, you know, Q2 went from 1.1 billion to 1.8 billion now. Like the numbers, like assets on the platform, 9 to 15, you know, 1.1 to 1.8 billion. Like, it's kind of like mind-boggling how quickly those have grown this quarter. I'm not saying you should, you know, annualize those figures, but it does feel like you guys are hitting this curve of like, okay, crypto is now happening in the US. You've, like, you know, spent all this time and money investing in everything, and now it's finally, you're just starting to add assets and customers and volume.
And it's hard for us to get because we've been grinding for 8 years, more than 8 years, quite frankly.
Yeah.
You know, 8 years as a public company. Is that in lots of ways, the checkered flag hasn't even fallen yet. The checkered flag will fall when this market structure bill gets passed. When I mean the checkered flag, it's when all the institutions say, hey, it's safe to swim in the pool.
Yeah.
When Google and Apple are having big meetings about, well, what should we do with crypto?
Yeah.
Right? Like, you can't use stablecoins on your iPhone.
Yeah.
You use Apple Pay.
Yeah.
At one point, stablecoins are going to be there, by definition. And so the world is going to move into this architecture sometime in the next, you know, like I keep saying, 18 to 36 months. I can't predict the exact time.
Yeah.
But the herd is finally coming. And I was 10 years early on that goddamn expression.
The herd.
Maybe when it finally shows up, I'm going to tattoo it very small on my because it was the right idea.
Yeah.
And man, oh man, it took longer than I thought. And part of that was freaking Gary Gensler and Elizabeth Warren and the slowdown. And part of it was it took a while for these blockchains to actually be built robustly enough to process, you know. And there's still debate on, will these blockchains be fast enough? Are we going to have level twos? And are level twos really even blockchains? Right? Is Base a database or is it a blockchain?
Yeah.
It's a fair debate. And I'm sure Brian would argue really loudly that it's a blockchain. And the skeptics will say, well, like, these are all healthy debates.
Yeah.
And the markets haven't decided what's important yet. Right? If you had asked any crypto purist, anyone, if Tron was going to be a really important blockchain,
it's crazy.
They would have said less than 1 in 100 chance. And let me tell you, shout out to Justin Sun, Tron is a really important blockchain. It processes more stablecoin payments.
Yeah, they do like $2 million in fees a day. It's like the biggest sleeper. The chart is just up and to the right.
Why?
Slowly.
Because we got it wrong.
Yeah.
You got, Delphi got it wrong. Everyone thought, decentralization is so important. Well, if you're sending small payments across blockchain rails, you care about fees.
Yeah.
You don't care about the safety of it as long as it hasn't broken.
Yeah.
And so far, no one's lost their money. There's been no 51% attack. There's been no Justin's stolen your money or stolen your data, right? And so for his niche, he filled a customer demand really brilliantly. And, you know, you can make all the comments you want about, well, there's not as much whatever reason he did it, people used his blockchain and didn't demand something else. And so I don't think, I've learned not to be arrogant about what people will want.
Yeah.
Right? We originally thought decentralization was the core principle to this business, and privacy was. And in some instance, people don't care.
Yeah. That makes sense. Okay, I feel like we covered most of the things on Galaxy. Is there anything else Galaxy related we want to chat about? I want to ask you a few other questions.
Listen, I would say when I step back, I have not been more energized. I told Chris, I said, Chris, I got bad news for you. I'm not retiring. This is fun. There is so much going on. It's energizing. We are in a hunt for talent. And so send your resumes, send good ideas.
Yeah.
We are, again, I said this all the time, our best assets go up and down the elevator every day. And we have big growth plans. And that all happens around, world-class people.
Yeah.
And you're looking for beasts, male or female. I got to get another word for that because it doesn't translate as well to our really talented female employees. They don't want to be called beasts. Beauty and the Beasts. But you're looking for people that wake up hungry, that are scheming in their minds, that want to execute, and that come up with the idea that we should. Like the one thing I tell young people, if you're working at a company, learn to say we should. Learn to develop confidence in your opinion, not just because it came out of nowhere, because you worked on developing a thesis and you think you're right.
Yeah.
And you have the confidence to walk in your boss's office and say, hey, we should. And that's the quality that's missing. That's always in deficit at most companies, and that we're trying to foster here and we're trying to hire for here.
Yeah, that makes sense. And I just to recap, because like I think a lot of the people who kind of follow me on X are more number oriented, but just going through the business lines again, if they can execute on this full 3.5 gigawatts, that could be like 50, 60, 70 billion dollars of equity value. And, if you just take half of what they made in Q3 and annualize it, that's $1 billion on the crypto business. Decide what multiple you want to use. That could be another, 15, 20, 25 billion dollars. So I'm personally very excited. I'm young. I love the atmosphere here. I've talked to a lot of the management team here just over, like yesterday, and super excited for what you guys are building right in the center of crypto and AI, like two of the biggest themes that are going to happen in my lifetime. So I'm a happy holder, and it was good to talk to you about Galaxy.
Awesome.
Yeah.
Duncan, thanks a ton, and congrats.
Yeah, thank you.
You built a great following.
Want to stay ahead of the biggest technological shift in history? Subscribe now to get insights straight from the sharpest minds in tech and finance. Quick legal note, this show is for educational purposes only. Nothing here is financial advice. Investing always carries risk. Never invest more than you can afford to lose. Thanks for tuning in. See you in the next one.